Thanks for clicking. We had another big week in China real estate news this week, with Evergrande under threat of defaulting on yet another bond, this time to onshore creditors. We also received some further worrisome news for China's developers, as mortgage holders across the country are refusing to make their mortgage payments as developers continue to fail to complete their projects. And it's not just a lack of mortgage payments and a struggling real estate sector putting pressure on Chinese banks. This week we saw thousands protest in the province of Henan after the banks froze millions in savings in response to an attempted bank run. Given that China is supposed to be calming the markets and instilling confidence following the end of their zero COVID lockdowns, bank runs and real estate defaults are not exactly what the doctor ordered.
Thank you for your opinion.
So what I want to do today is go over Evergrande's potential default, discuss why thousands of Chinese are refusing to pay their mortgages, and then take a look at these bank protests, as it's definitely a sign of cracks in the system. China's real estate crisis isn't going away anytime soon, and there is another $13 billion in outstanding bonds due this year alone. We'll continue to have updates out on this real estate crisis in China on this channel every Friday. If you want to get those updates, make sure you click like and subscribe, but for now, let's get into Evergrande. As mentioned, Evergrande is back in the news after its proposal to extend its deadline for its bond payment was rejected by its onshore creditors.
If you're looking for money, I don't have any yet.
Well, this isn't Evergrande's first default, not by a long shot. It is the first time that Evergrande has proved unable to get its bonds extended by onshore creditors and will, in fact, represent an onshore default. And again, while Evergrande has indeed defaulted on offshore bonds, this is the first time it has defaulted on onshore bonds, which could have real negative implications for China's real estate sector as a whole.
Is the beginnings of the stress creeping into the much larger onshore market. And it's really there that if we see stress developing, that there is a much broader systemic risk.
International financing for China's real estate sector has all but dried up, with offshore bond sales falling 90% last year. As such, onshore funding was the only funding available for these real estate developers to finance their projects. And if that becomes prohibitively expensive, that could become a real problem for Chinese real estate developers as they try to continually complete their projects and work their way out of this real estate crisis. According to Li Kai, chief investment officer at a Beijing private equity firm, the failure of Evergrande to make its payments will have real implications for the rest of Chinese real estate sector and the cost of borrowing for other real estate developers in China. And it's not a great time for increased stress on the local credit market. Not that there's ever a great time for that, as it was reported this week that Chinese buyers of 35 projects across 22 cities have refused to make their mortgage payments until the projects are completed. By Thursday, that protest had widened to 100 projects in China where homebuyers are refusing to make their mortgage payments. So, fed up with their construction delays, waiting for their apartments to be completed, the Chinese homebuyers have refused to make their mortgage payments across China, putting even more pressure on the banks that are already stressed from this real estate developer crisis. And this problem has only been amplified, as while Chinese homebuyers wait for the construction of their apartments to be completed, similar apartments have seen their purchase prices drop by 15% during that waiting period. So, can you imagine experiencing continued delays on your property, on the construction of that property, only to see a similar property drop in value by 15% in short order?
Talking to me?
While these mortgage protests by Chinese homebuyers are currently manageable for China's banks, taken in conjunction with the onshore credit defaults that are currently occurring and are likely to continue to occur throughout the coming months and years ahead, a lot of pressure is being put on China's banking system. And some of the cracks in the banking system are already starting to show, as there were mass protests against the banks in Henan province this week after savers were cut off from their funds in April. As a bit of a backstory, in April, Chinese savers in these banks were cut off from their finances after they attempted a bank run after it was uncovered that one of the main shareholders in those banks was arrested for serious financial crimes.
That seems reasonable.
All right.
So, Chinese savers saw that one of the major shareholders was arrested for financial crimes, attempted to pull all of their savings out of the banks, and then as a result, the banks froze their funds and they have been unable to access those funds ever since. While protesters at the banks were beaten by a mob while the police watched, Chinese authorities then responded and said they would be paying back these Chinese savers up to $7,400 starting on Friday of this week.
Gonna be taken care of.
Now, let's be clear, this wasn't a massive countrywide bank protest. This was limited to 4 banks in Henan province, but could definitely be a sign of things to come as cracks are starting to show in China's banking system. As we saw in the 2008 US financial crisis, when everybody is making money, nobody asks too many questions, as there's a fairly large incentive for them not to. But when the music stops, those cracks start to emerge, and we start to see that rot in the system come to light, as we saw with the Bernie Madoff scandal almost 14 years ago. So we could very well be starting to see something like this in China. This real estate crisis has been a slow-moving crisis, but we've seen it speed up, and we've seen developer after developer, default after default, and now, after all of the international funding has dried up, it's starting to hit the domestic sources of funding, meaning the banks. And we're starting to see even more cracks in the banks at the retail level, with mortgage holders refusing to make their payments and protests against the banks for refusing to unfreeze funds that probably shouldn't have been frozen to begin with almost 4 months ago. These little cracks do start to emerge during a real estate crisis, and we're starting to see more and more of them happening in China as this continues to go on. Whether or not Beijing will be able to muster enough financial firepower to contain this crisis, to contain this spreading to the banking sector as a whole, remains to be seen, but we will obviously have updates out on that on this channel. If you want to get those updates, make sure you click like and subscribe, and thanks so much for watching.